We've got Peter Mcguire joining us as well on the phone line this morning. Peter, good to have you with us. We've got some headlines from the Bank of England this morning. What did you make of the steps they've taken to ease things post-Brexit?
Well, good morning, and thanks for inviting me on the show. Well, there's no doubt, we understand the weakness. It's a month and a half on, not unusual for these sort of steps to take place. We understand the fragility of as far as the UK economy on a whole, and I think fundamentally we don't expect things to change there in the short term. So probably be continued weakness. You're looking at those recessionary fears and what happens over the next 6 to 12 months. I think the interesting tale is going to be what impact does it have, of course, the pound, what does gold do in UK pound value, and more importantly, do other countries follow suit and take on board a Brexit opportunity?
Peter, good morning. We've also seen more quantitative easing coming out, first from Japan and now from the UK. How much more to go, Peter? Because the whole issue seems to be, at least Japan doesn't seem to be reviving itself with any more money. But some say the UK didn't even need quantitative easing. Half the world is happy to invest in the UK. I mean, they may not invest in Italy or Greece, but they'd certainly be very happy to put money up in UK. Is that a place where you could see a boom, actually, both in the stock markets and otherwise?
Well, good morning, Ashu. Look, you may well do. I mean, when you compare it to Greece and Italy, I think fundamentally England's ahead of them. So they haven't. I think they're a long way ahead of them. And that just gives you an idea of the fragility and the temperament as far as some of those Euro members. Yes, those dollars coming into the UK, I'm conscious as far as you may see. I mean, we've seen the FTSE over the last, say, 4 weeks do extremely well. So I'm sure that it'll probably continue. Fundamentally, dropping rates and trying to stimulate, comparing itself to Japan. They've got a different set of factors, of course, deflationary fears and what happens at, Abenomics. Been some very interesting stories coming into the Economist magazine as far as, what the outlook is for Japan, and it just doesn't look strong at all, quite fragile, and that will probably continue as well. So for many years to come. And they've got an ageing population, and of course the demographic factor there is greatly, a huge hindrance moving forward. So yes, whilst we look at the UK model, I think I don't think that Brexit was necessarily a bad thing for it. And moving forward, you're probably going to see, yes, as you mentioned, a stronger FTSE and an overall, revitalisation as far as UK.
Got it. Peter, what are you also tracking with regards to expectations of the Fed later on in September? We've already started to hear chatter. Latest numbers look good. What are you watching out for there?
Well, I think when you look at it, there's no guarantee that it's going to happen in September. Mm-hmm. There's talk and there's plenty of conjecture at the moment. It's probably at even Steven as far as, the fors and against, where I think the overall picture is as Trump heading into a quagmire, and as each day rolls forward, there's more bad news as far as his election campaign, and of course where Hillary goes. So I think the government's more in tune with that sort of survival mandate and keeping on board and, staying the status quo, a baton passing from Obama straight away to Clinton. And then, where Yellen's positioned, we've got non-farm payrolls coming out. We've got a few other things on the horizon. Earnings haven't been that great. I think it's, it's a month away and there could be more bad news over the coming month, which could put a handbrake as far as Yellen moving. But we've always said that there'll be a rate rise before the end of the year. So it's just a wait-and-see prospect at the moment.
Peter, what's happening in your part of the world? Because we've seen natural gas prices kind of converge around the globe because there's so much new LNG coming out of Papua New Guinea, out of Australia. Same is happening with crude. Even though the Americans may control the index, the fact of the matter is that the WTI and North Sea Brent are hardly representative of crude oil prices around the globe. How much new natural gas and crude is coming from your side of the world? Because it doesn't get reflected in index.
As far as, well, we're very conscious as far as what's happened in the last matter of weeks with the crude market, and of course it's had a bounce in the last 36 hours. Will that continue? Will the short sellers scrambling to just continue that short sell and 22% down in about 4.5, 5 weeks? The natural gas situation, the world's awash with crude, the world's awash with nat gas, and it's very difficult to summarise in the sense of have we found a bottom to the market? The consumption patterns aren't changing. The global demand is strong, but they're producing too much of the stuff, and that's the issue at hand. So whilst we've got Nigeria coming back online, you've got all those big LNG productions out of Australia and, of course, New Guinea, it's going to be a temperate market, and it's difficult to look at companies that are going to show, wonderful growth over the next, 12 to 36 months. Many of them are culling headcount to try and make them more attractive as far as a dividend play. And it's a very, very fragile market if you're involved with, miners and exploration globally, and more importantly on those domestic fronts.
Peter, how's India looking amidst all this? So we had the big GST reform pushed through this week as well.
Sorry, which was that?
I said, how's India looking in the middle of all this? We had GST being pushed through, so a major step on the reform front, though markets didn't react much to that news.
Yes, of course, well, Indian GST. I mean, look, I still believe that it's, the sun shines well and truly on its back, and it's going to be, good years ahead. My storyline hasn't changed, neither does the IMF's. Everything's right. It's, the GST issue. You've got all these outliers, and you've got these concerns, but more importantly, fundamentally, I think you've got a relatively strong domestic market, and of course, there's plenty of inflows and global inflows that will continue to support the country as a whole moving forward. So I can't see any of that really changing in the foreseeable future.
Peter, I just, you're a veteran of the market, so I want to take an independent, your personal opinion on this. These are things that are not discussed in research reports. They're not really talked about. But in private conversations, I find the world becoming pretty conservative, not open to really looking at people coming in from outside because it's taking local jobs. And there has been permanent destruction of local jobs across many countries, including the US. Could we then see a real problem for sectors like information technology, BPOs, as the world seems to be getting more conservative and the political leaders seem to be picking up on it?
Well, there's naturally going to be competition forces that move into any market, and as far as IT is concerned, then you've got to look at it and say, well, the first movers, your mature markets, all of those strategies that companies offer, and of course, you've got fast movers out there, you've got new technologies that leapfrog incumbent players. All of these are just normal business course of events in any life time of a technology or an innovation, or more importantly, a workforce. And while some companies, countries and regions stand tall and they've been very innovative, you've got other regions that are hungrier, or they come out with newer technologies. And let's look at the Tesla case, for instance. We roll our minds back 5 years of what he's been able to produce, Elon Musk. Have a look at the fintech industries. Have a look at many different players have captured markets and taken on board and been able to disrupt. And I can't see that changing. That's just human element, and that's just entrepreneurship and innovation. So that's all ahead of us, and I think that's the exciting part of the market.